The ruling arrives on August 21st, 2026, in the flat language of a sports bureaucracy. The FIFA Disciplinary Committee bans Leandro Paredes for 10 international games. 2 other Argentina players are suspended in the same stroke. The cause is a scuffle after the 2026 World Cup final, the biggest match the expanded tournament could stage. 10 games is not a scolding. For a player whose club salary, image rights, and national status feed one another, an international ban cuts a hole in a career calendar. Argentina must plan without him. Clubs that paid for a man returning intact receive a man under a cloud. The public sees a villain or a martyr. Zurich sees a case file. This is the power everyone understands. A private association in Switzerland can remove a national hero from the shirt that made him one. No election is required. No domestic court has to agree. The committee speaks and the calendar changes. Yet that authority is still the visible edge of something older. FIFA does not merely police players. When it awards a World Cup, it presents host governments with a bargain that looks like celebration and behaves like legislation. Want the lights and the cameras? Then change what your tax authority may touch. Change, if a sponsor requires it, what your commercial code permits inside a stadium on match day. The association does not occupy a ministry. It owns the prize every president wants to stand beside. Viewers argue about discipline because discipline is filmable. The deeper contest happens years earlier, in bid books and annexes, when a country still believes it is courting a tournament and has not yet noticed it is being asked to rent out a piece of its law. That is the contradiction. The same house that can sideline Paredes can make a sovereign rewrite the rules of its own marketplace as the cost of a festival. The first power is called sport. The second is called a guarantee. The 2026 hosts already signed their way through that second one. For most of the 20th century, hosting the World Cup looked like a civic honor with a construction bill attached. A country built grounds. It paved roads to those grounds. The Fédération Internationale de Football Association, founded in Paris in 1904 and later rooted in Zurich, allocated the tournament the way a club allocates a cup, among members, with politics, but without a thicket of statutes that rewired a host's fiscal year. That older picture is the blind spot. It still governs how newspapers describe a bid: stadiums, hotels, airports, security. What changed as television money thickened and the tournament became a 4-year cash engine was not the romance. It was the paperwork that traveled with the romance. By the late 20th century, FIFA had become something rarer than a federation. It was the sole licensor of the only men's football championship that could stop traffic on every inhabited continent. There is no rival World Cup to bid for. There is no substitute festival that gives a president the same skyline of flags. When a single private body sells a unique prize, it does not negotiate like a vendor. It issues conditions. Those conditions hardened into a standard kit. Candidate countries do not merely promise venues, they deliver government guarantees, formal undertakings signed at the level of the state that certain laws will be passed, suspended, or carved out before the first match. The guarantees cover visas and work permits for an army of officials and contractors. They cover customs lanes for equipment. They cover exclusive commercial clean zones around stadiums, in which a city's ordinary signage law is asked to step aside so a global sponsor can own the eye line. And they cover tax. The public rarely reads a bid book to the annex. The annex is where the state is converted from host into service provider. A finance ministry that would never exempt a domestic concert promoter is invited to exempt the organization that will invoice the planet for broadcast rights, hospitality, licensing, and tickets. The invitation is not framed as a favor. It is framed as a requirement of candidacy. Refuse, and the inspectors record a deficiency. South Africa, preparing the 2010 tournament, passed special measures that created a legal bubble around FIFA-related activity. Russia and Qatar, for 2018 and 2022, constructed their own exceptional regimes, each tailored to the same core demand. The World Cup must travel inside a portable legal climate, not inside the host's ordinary one. On the 2nd of December 2010, inside the Zurich Hall where FIFA gathers its members, the association awarded 2 future tournaments in a single sitting. The personal dramas that followed those votes would later fill courtrooms and headlines. The legal template survived the disgrace. The guarantees remain. Look at the incentive, not the press release. FIFA is organized as a Swiss association. The World Cup is its great harvest. Independent reporting has shown, cycle after cycle, that FIFA structures the event so that billions in related revenue can move with as little local tax friction as host law will allow. And then it writes the host law into the bid. That is not an accident of accounting. It is the point of the guarantee stack. Governments accept the stack because the alternative is humiliation. A failed bid is a photograph of a president not standing on the pitch.
A successful bid is a national project that can justify airports, policing budgets, and a season of unity. By the time the United 2026 bid, the joint candidacy of the United States, Mexico, and Canada went to a FIFA Congress in Moscow in June 2018, the template was mature. 3 democracies, 3 tax systems, a chain of American cities and venues north and south of those borders, all stepping into a machine designed in Zurich. Most people who watch that vote remember the map. They do not remember that the map came with a demand to treat FIFA's harvest as if it were a diplomatic pouch. The first chapter is signed when a government still thinks it is applying for a party.
In Zurich, the people who matter to this story do not wear national shirts. They wear the patience of a monopoly. FIFA's commercial staff sell a climate, a month in which 1 billion eyes can be delivered to a short list of brands on terms no domestic league can match. The World Cup is not merely a tournament they referee, it is inventory. Among the brands that have paid to live inside that inventory is Budweiser, the American lager then owned by Anheuser-Busch InBev, the Belgian-Brazilian beer giant. A beer sponsor does not buy a logo on a boarding. It buys the right to be the drink in the stands. If a host country's public health statute says otherwise, the statute is not from the sponsor's chair a local curiosity. It is a breach of the thing that was purchased. That is the motive that will walk into Brasilia, not a cartoon of villainy, a contract. The company paid FIFA. FIFA promised a commercial environment. The environment required a legal weather change. On the other side of the table sit ministers who have already spent political capital announcing the tournament. A president who has stood beside the trophy cannot easily explain to cameras that the trophy is leaving because a beer cannot enter a stadium. Local organizing committees live in fear of FIFA requirements, the way a contractor lives in fear of an inspection. Their careers are indexed to smooth delivery, not to the dignity of a 1996 health law. Jerome Valk, then FIFA's Secretary General, said the quiet part in 2013, with a sentence that still hangs over every bid. Less democracy, he suggested, can be better for organizing a World Cup. He was talking about speed, about the friction of hearings and amendments and street protest. He was also describing the product FIFA prefers, a host that can move a statute the way a grounds crew moves a goalpost. Inside Brazil, the opposing motive had a face as well. Public health officials and some legislators remembered why the country had restricted alcohol in sports venues in the first place. Brazilian football is not a polite picnic. Stadium violence, crowd control, and emergency rooms are not theoretical. A ban written in 1996 was a scar from experience, not an aesthetic preference. Dilma Rousseff's government had to hold both facts at once.
The World Cup was already a promise to the nation and to FIFA. Construction delays were already a political wound. Adding a fight over beer looked to the Planalto Palace like a fight they could not afford to win. Ambition here is not mysterious. It is the ambition to not be the administration that lost the cup in a briefing room. So the characters arranged themselves. A sponsor that bought a climate, a federation that sold one, a government that already spent the prestige, a health statute that had no lobby equal to a global beer company, and a public that would be invited, later, to cheer inside the very bowl whose rules had been edited for someone else's product. The fight that follows is not about taste. It is about who gets to decide what a sovereign may forbid.
Brasilia, 2012. The bill on the floor does not call itself a beer statute. It calls itself the General World Cup Law, Lei General da Copa, later numbered 12,663. Deputies know the cameras are watching the alcohol clause because the alcohol clause is the insult you can explain in a single sentence. A federal restriction dating to 1996 had kept stadiums dry. The new text carves an exception for FIFA's 2013 Confederations Cup and the 2014 World Cup. Budweiser, having bought the right to be the drink, will be the drink. Because the same instrument that unlocks the taps also builds the fiscal tunnel. Visa lanes, customs, ambush marketing rules that muzzle street vendors near the venues, and the tax architecture that FIFA's bidding documents had already named, in the bloodless style of a closing binder, as Government Guarantee Number 3. Guarantee Number 3 is not a suggestion, and it is not a treaty between equals. It is a pre-award condition. A candidate government signs that it will create, in domestic law, a wide exemption hovering FIFA, FIFA subsidiaries, the local organizing entity, and a halo of commercial affiliates for activities tied to the tournament. Corporate income taxes, value-added and sales taxes on designated flows, withholding taxes on payments that would otherwise be clipped at the border, customs on temporary imports of the circus's own equipment. The list is long because the harvest is long. Broadcast rights sold from Zurich, hospitality packages sold to corporations. FIFA does not occupy a seat in the Chamber of Deputies and write the clauses in its own hand. That distinction matters, and it is the whole trick. The association has no constitutional authority to draft a Brazilian statute. What it has is the right to withhold the tournament from any government that refuses to draft the statute itself. Legislators still vote, presidents still sign. The authorship is local, the ultimatum is not. In the weeks before the vote, the public argument narrows to foam and nationalism. Talk radio asks why a Belgian-Brazilian brewer and a Swiss association should overturn a health rule Brazilians wrote for Brazilian crowds. Health voices warn about violence and emergency wards. FIFA's local allies answer with the language of commitments already made. The commitments were made when the bid was still a romance.
Now they arrive as a threat, dressed as a timetable. The law moves. On June 5th, 2012, it is sanctioned. The exception opens. 2 years later, John Oliver will walk a global audience through the episode and give it the name that sticks in English, the Budweiser Bill. If the public remembers beer, the public is not reading Guarantee Number 3. Follow the money logic, not the punchline. A host government spends public funds on arenas, rail links, policing, and the unglamorous overtime of a state that must look modern on television. Those costs sit on domestic budgets. The surplus that a normal industry would shed into the local treasury, the tax on the foreign entity's profit, the VAT on the high-end hospitality, the withholding on the outbound fee, is precisely what the guarantee asks the treasury to forego. The country buys the party. The party invoices the planet from a legal pocket the country has agreed not to touch. Economists call the broader pattern a winner's curse. In an auction for a unique object, the winner is often the bidder who most overestimated the prize. World Cup hosts do not only overestimate tourist arrivals.
They overestimate how much law they can surrender without noticing the surrender. Prestige is the bid currency that does not appear in the spreadsheet. Presidents spend it. Finance ministers discover later that they have also spent the right to tax the only visitor who came with billions attached. Now, move the same skeleton north. When the United States, Mexico, and Canada locked in the 2026 tournament, they did not invent a new philosophy. They inherited one. 3 finance ministries, 3 legislatures, 3 public debates of uneven volume, and the same non-negotiable demand: create the exemptions or do not host. American cities that spent years chasing a venue were in no position to tell Zurich that the Internal Revenue Code was a point of pride. Mexican authorities, already fluent in the politics of spectacle, treated the legal package as part of the price of remaining on the map. Canadian officials, in a political culture that usually boasts about rules-based order, discovered that the order in question had been written in a bid annex.
Some of the 2026 concessions were dressed in the language of ordinary major event practice: temporary imports, hospitality tax relief, streamlined visas. That dressing is how a radical demand learns to look like logistics. A customs waiver for camera equipment is easy to defend. A structured decision that FIFA's World Cup revenue should pass through 3 rich countries with a specially lowered fiscal claim is harder to defend. which is why it is rarely presented as a structured decision. It is presented as what hosting requires, and hosting required it. The 2026 tournament has now been played under that arrangement. The flags came out, the anthems were sung on schedule, the tax pocket held, the exemptions did their work off camera. The pocket was the point. A private association set a condition. Governments translated the condition into statutes, regulations, and host city agreements. The translation allowed everyone to say that sovereignty had been respected because a sovereign had held the pen. The conditions still came from elsewhere. This is monopoly rent, collected in a rare currency. Not only cash, but the power to make another country's law the envelope for your cash.
The wound is not that a beer was sold in a Brazilian bowl. The wound is that the sale and the exemption and the clean zone ordinance all taught every future host the same lesson. If you want the anthem, you will open the code. You will call it a partnership. You will sign it as a guarantee. And then the lights come on, and the argument is already over. The month ends the way these months always end. The temporary overlays come off the airports. The volunteer vests go into boxes. Players fly back to Friday nights in Madrid, Manchester, Milan. Some of them carrying suspensions that will travel with their club seasons, like unpaid invoices. Host cities count hotel taxes and try not to count the line items they agreed never to count. What remains is the more durable object, a set of legal habits. A government that has once written an exemption for a private association has taught its own civil service how to do it again. The next mega festival will arrive with a binder that looks familiar. Olympics, continental championships. Each will say it is unique. Each will point at the last binder and call the contents standard practice. Standard practice is how an extraordinary demand becomes furniture. The 2026 North American tournament has just demonstrated the maturity of that furniture. 3 rich democracies, fluent in the language of sovereignty, still built the pocket. They did it with better lawyers and softer press releases than Brasilia managed in 2012, which is another way of saying they did it with more skill, not with more resistance. Skill is not independence. Skill is a nicer pen. There is a temptation to narrate this as a morality play about sport corrupted by money. The harder story is about prestige as a market. Nations do not line up because they have been hypnotized. They line up because a month of planetary attention is a real asset in domestic politics, in tourism boards, in the careers of mayors who want a skyline on a poster. FIFA discovered that the hungry will pay in statutes if cash and pride are not enough. Call the principle by its plain name. When one private body holds a ritual no state can reproduce, that body can price access in any currency the state still controls. And when the accounting is ambitious, the reach of the tax authority and the content of a commercial ban. The state remains formally supreme. It holds hearings, it prints the law in its own gazette. Formal supremacy is the costume the ultimatum wears so that no one has to call it an ultimatum. None of this requires a conspiracy in a Swiss cellar. It requires a bid document, a sponsor contract, a minister who has already booked the photo, and a public that will be busy arguing about a tackle. The tackle is real. The argument about the tackle is real. They are also excellent weather for an annex. After a World Cup, commentators love to ask whether the host won. They mean hotels and branding and a soft glow in the polls. A quieter audit would ask which rules moved and who could have refused to move them without being told they had failed their country. If the answer is that no elected official could have refused, then the host did not hire a tournament. The host accepted a temporary constitution for a festival it will not own. The players will be judged for a moment of temper. The governments will be praised for the fireworks. Somewhere between those two verdicts, a guarantee sits in a file, already waiting to be copied. If a country will rewrite a tax code for a song it does not own, what will it rewrite next time the song is offered?